In the automotive industry, headlines are often dominated by new vehicle launches, breakthrough technologies, and record sales figures. Yet sometimes, the most important stories are not about a single car at all. They are about the forces reshaping an entire industry. And in 2026, few companies illustrate that reality more clearly than BMW. Over the past several weeks, BMW has found itself at the center of multiple global conversations. From electric vehicle adoption and changing consumer behavior, to international trade, artificial intelligence, market expansion, and financial performance, the German premium automaker is navigating one of the most challenging and transformative periods in modern automotive history. The story begins with a difficult reality facing not only BMW, but much of the global automotive sector. In June 2026, BMW issued a profit warning that surprised investors and sent shockwaves through financial markets. The company's shares fell sharply, reaching their lowest level since late 2020. The warning highlighted a range of pressures affecting the business. Slowing demand in key markets, increasing competition, geopolitical uncertainty, and changing consumer preferences have created a more complex operating environment than many analysts anticipated. China remains one of the most important battlegrounds. For years, premium manufacturers enjoyed strong growth in the world's largest automotive market. Today, however, local competition has intensified dramatically. Chinese automakers are no longer competing solely on affordability. They are increasingly targeting the premium segment with advanced electric vehicles, sophisticated technology, and attractive pricing. This shift has created significant pressure for established global brands, including BMW. At the same time, geopolitical developments continue to influence business conditions worldwide. Regional conflicts, fluctuating energy prices, and economic uncertainty are affecting consumer confidence and purchasing decisions across multiple markets. Yet, despite these challenges, BMW's leadership remains confident about the company's long-term direction. Speaking after the profit warning, BMW Supervisory Board Chairman Nicholas Peter emphasized that the company remains on the right track with its next-generation products and strategic initiatives. That confidence is rooted in BMW's belief that the future of mobility is being shaped by technological innovation, electrification, and intelligent software integration. Few examples illustrate this transformation better than the company's upcoming Neue Klasse generation of vehicles. BMW views Neue Klasse not simply as a new vehicle platform, but as a comprehensive reimagining of the brand's future. The architecture introduces advanced electric powertrains, next-generation digital experiences, improved efficiency, and a fresh design language intended to define BMW products for years to come. For the company, these vehicles represent a major investment in long-term competitiveness. But while future products capture attention, current market trends are creating immediate opportunities as well. One of the most significant developments in Europe during 2026 has been the resurgence of electric vehicle demand. According to industry data reported by Reuters, rising fuel prices linked to geopolitical tensions have encouraged more consumers to consider electric vehicles. As petrol costs increased, both new and used EV sales experienced renewed growth across several European markets. For manufacturers like BMW, this trend provides an important boost to electrification efforts. Consumers who may have previously hesitated to switch from traditional combustion engines are increasingly evaluating the long-term benefits of electric mobility. Lower operating costs, reduced dependence on fuel prices, and improving charging infrastructure continue to strengthen the appeal of EV ownership. However, industry leaders remain cautious. Some executives have warned that demand could weaken if fuel prices decline significantly. The recent surge demonstrates how external economic factors can influence purchasing decisions, but sustaining long-term growth requires more than temporary market conditions. For BMW, the solution lies in creating electric vehicles that stand on their own merits, rather than relying solely on economic incentives. The company's strategy focuses on improving range, charging speed, performance, digital functionality, and overall customer experience. That approach appears increasingly relevant as battery electric vehicle adoption reaches new milestones. European registrations of battery electric vehicles achieved a record market share during May 2026, reflecting continued momentum in the transition toward electrified transportation. Government policies, incentives, environmental targets, and evolving consumer attitudes all contributed to this growth. For BMW, these developments validate years of investment in electrification. Yet electrification is only one piece of a much larger transformation. Another major trend shaping the automotive industry involves artificial intelligence. Across Europe, companies are reevaluating their technology strategies as access to certain American AI services becomes more restricted. Reuters reported that major European firms are increasingly diversifying their technology providers while also supporting the development of domestic alternatives. For automotive manufacturers, AI is becoming central to everything from vehicle software and driver assistance systems to manufacturing efficiency and customer interactions. BMW has invested heavily in software-defined vehicles and intelligent digital ecosystems, making artificial intelligence a critical component of future products. As cars become more connected and capable, software increasingly differentiates one vehicle from another. This shift is transforming the competitive landscape. Historically, automotive leadership was often defined by mechanical engineering excellence alone. Today, success requires expertise in software development, data management, connectivity, and intelligent systems. BMW's future competitiveness will depend not only on producing exceptional vehicles, but also on delivering seamless digital experiences. At the same time, global supply chains continue to evolve. During discussions about European industrial policy, BMW's Nicholas Peter argued that Europe should think more in terms of made with Europe, rather than strictly made in Europe. His comments reflect a broader understanding of how modern manufacturing operates. Automobiles are among the most complex products in the world, requiring components, materials, and expertise from multiple countries and regions. Rather than pursuing complete self-sufficiency, BMW supports collaborative approaches that strengthen competitiveness while maintaining access to global innovation. This perspective highlights one of the defining characteristics of the modern automotive industry. Success increasingly depends on interconnected networks rather than isolated national markets. As BMW navigates these strategic challenges, the company continues expanding its presence in emerging growth regions. India represents one particularly important opportunity. According to company executives, India is expected to become the fastest growing market for BMW's Mini brand by the end of 2026. The company aims to more than double Mini sales in the country, reflecting confidence in growing demand for premium mobility solutions. India's expanding middle class, improving infrastructure, and increasing appetite for premium products create attractive conditions for long-term growth. For BMW, success in markets such as India helps diversify revenue streams and reduce dependence on more mature regions. Meanwhile, competition across Asia continues to intensify. At the Hong Kong Auto Show, Chinese manufacturers demonstrated their determination to expand beyond domestic markets and challenge established brands internationally. Many are targeting affluent consumers in right-hand drive regions, including Australia and Southeast Asia. Their focus on premium electric vehicles reflects the growing sophistication of Chinese automotive technology and design. For BMW and other established manufacturers, this trend represents both a challenge and a catalyst. Competition encourages innovation, accelerates technological development, and raises expectations across the industry. Companies that adapt successfully can emerge stronger, while those that fail to evolve risk losing relevance. The premium automotive segment is therefore entering one of the most competitive periods in its history. Even luxury and performance manufacturers face similar pressures. Porsche, for example, continues pursuing recovery while confronting challenges in key markets. Ferrari recently appointed a new chief marketing and commercial officer following the debut of its highly anticipated electric vehicle program. Across the industry, brands are balancing heritage with innovation as they prepare for a future increasingly defined by electrification and digitalization. BMW's response has been to invest aggressively in transformation while maintaining its core identity. Throughout its history, the company has built its reputation on driving dynamics, engineering excellence, and premium quality. The challenge today is translating those strengths into an era where software, connectivity, and sustainability are equally important. That transition is already visible in the company's newest products. Future BMW vehicles are expected to feature advanced operating systems, intelligent assistance technologies, enhanced personalization capabilities, and more efficient electric architectures. The goal is not simply to electrify existing vehicles, but to create entirely new experiences. This philosophy reflects a broader shift occurring throughout the automotive sector. Consumers increasingly evaluate vehicles based on how seamlessly they integrate into daily life. Connectivity, digital services, over-the-air updates, intelligent interfaces, and personalized features now play a major role in purchasing decisions. BMW's strategy recognizes that future customers expect more than transportation. They expect technology that enhances convenience, productivity, entertainment, and safety. At the same time, traditional automotive values remain important. Performance, reliability, craftsmanship, and emotional appeal continue to influence customer loyalty. The most successful manufacturers will be those capable of balancing innovation with authenticity. BMW believes it can achieve that balance. Even amid recent financial challenges, company leadership continues emphasizing long-term opportunities rather than short-term setbacks. The profit warning may have generated headlines, but executives remain focused on the broader transformation underway. They argue that investments being made today will position BMW for future success as market conditions stabilize and new products reach customers. History offers some support for this perspective. The automotive industry has experienced numerous periods of disruption over the past century. Economic crises, oil shocks, regulatory changes, technological revolutions, and shifting consumer preferences have repeatedly forced manufacturers to adapt. Companies that embraced change often emerged stronger. Those that resisted transformation frequently struggled. BMW's current situation reflects another chapter in this ongoing story. The company faces undeniable challenges. Competition is increasing. Consumer expectations are evolving. Global economic conditions remain uncertain. And technological change continues at an unprecedented pace. Yet these same factors also create opportunities. The transition to electric mobility opens new markets. Advances in software create new sources of value. Artificial intelligence enables more personalized and intelligent experiences. Emerging economies offer growth potential, and changing consumer behavior creates demand for innovative solutions. The question is not whether the industry will change. That transformation is already happening. The real question is which companies will shape the future and which will merely react to it. BMW intends to be among the leaders. Its investments in electrification, digitalization, intelligent software, and global expansion demonstrate a willingness to embrace the future rather than fear it. Whether discussing record electric vehicle adoption, evolving supply chains, artificial intelligence, premium market competition, or financial performance, every development ultimately connects to the same underlying theme. The automotive industry is entering a new era. Success will depend on adaptability, innovation, and strategic vision. For BMW, 2026 represents both a test and an opportunity. The challenges are significant, but so are the possibilities. As the company prepares its next generation of vehicles and technologies, it remains focused on a future where mobility is cleaner, smarter, more connected, and more intelligent than ever before. The road ahead may be complex, but BMW believes it is moving in the right direction. And in an industry undergoing historic transformation, the confidence may prove to be one of its most valuable assets.